All right. The Not Boring Generalists are back at it today talking about Zoom and Zoom earnings. We have Packy here with a very flashy and lovable Zoom background.
This was an accident, but I'm going to keep it up. Got to promote the brand.
So Packy, what do you want to give like a quick recap to folks about what went down yesterday?
Sure. So what went down yesterday, Zoom, the video conferencing software that is one half of the software tools that we're using right now to record this presentation or this Not Boring Generalist episode. That stock has been on an absolute tear since the beginning of quarantine. They've reported massive user growth throughout. They had a phenomenal Q1, and they're actually in fiscal year 2021 right now. So a phenomenal Q1 21. And then yesterday, they reported 355% year over year growth to $664 million in quarterly revenue. They massively expanded their free cash flow. So they're getting bigger, they're getting more profitable, they're doing it with fewer people. The stock is on a tear. I believe right now, as of this moment, it's trading at $457, which is up 40%. And on the year, it's up like 570% on the year. So just absolutely insane numbers out of Zoom.
Yeah, it's been hard to countenance in some way because it feels like, I haven't bought in at any point because it just constantly feels like, I'm too late into this game. I'm too late into this game. And it keeps making me look incredibly foolish. I would say very similar to Tesla. It's just a gravity defying stock at the moment. Where do you think they go from here? They've exceeded expectations this quarter. Can they keep this up?
So that I think there's a couple of questions with Zoom. One is, can they keep this up? Can they keep growing? And intuitively, and I think it's hard to remember how big the internet is and easy to forget that. But my gut says, what are the types of companies that aren't paying for Zoom yet or aren't using Zoom as a company yet that are all of the sudden in month 6 of the pandemic going to say, you know what, we should try that video conferencing thing. So it feels like growth, certainly will slow from 355%. I did the math. If they keep this pace up, they're going to be at $844 trillion in revenue in a decade. So obviously that pace is going to slow. They'd be bigger than the world's economy. So that is the huge question. Can they keep growing like this? The other, and we can talk about this, I'd love your thoughts, do they have moats and can they kind of defend this lead that they've built for themselves?
Yeah, we were talking about this a little bit off air, but in a sense, we're seeing like a hyper compressed innovator's dilemma cycle potentially playing out where Zoom obviously can't focus on new product right now. It wouldn't make any sense for them to divert attention away from making sure the core product works as well as possible. It's secure. They're selling as much as they can. They're upselling to their existing big accounts. In yesterday's earnings, someone from the team mentioned that 81% of the revenue increase came from new subscriptions, but 19% came from existing customers. And over the past quarter, I believe they sort of signed Exxon, Activision, grew a ton with ServiceNow. So diverting any attention away from that feels like it would be a distraction. But in the meantime, we've seen sort of these little upstarts begin to bubble and come onto the scene with slightly different offerings. So, are we going to see Zoom eventually lose out on some of these niches that could grow to a reasonable size? That's, I think, a question that they'll have to answer in the next 12 to 24 months.
It's crazy, right? Because on the one hand, the pandemic has been a really good thing for Zoom, right? Like this is a market cap that they wouldn't have achieved for the next, call it 5 years had the pandemic not happened, because they're getting both this accelerating revenue and this growth rate, which is just kind of combining to compound the growth of their stock price. So on the one hand, it's a really good thing. On the other hand, there's no way that you plan for this, right? Like maybe had plans to build out a platform on which atop which many of these upstarts would be built. But because the roadmap has gotten so accelerated, they're in a spot now kind of with their pants down where they have to focus on this core product, but they're leaving all these openings for other people to build on top of other software.
Yeah, and interestingly, Just as we started to talk some smack about Zoom, your picture for me is frozen. So I don't know. Is that a
Oh my
coincidence?
God. All right, let me turn off. It might be. This is, wow.
Is Eric listening? I can't rule it out. I'll say that, Packy.
Oh my
There we
goodness.
go.
All right, how about
You're
now?
back. Yeah, you're back.
So
Um,
did the words go through at least?
yeah, the words were there, and yeah, I'm totally with you. I mean, I don't know which of the, let's say, insurgent guard that you think are most interesting, but a few that for obvious reasons, I think are very intriguing are one, I think it's added a lot of fun to a lot of different recordings. And then I would say the folks at companies like Stream, which are almost like a Substack for video, adding sort of the pay gating element, helping you promote different sort of video events that, again, I feel like Zoom hasn't touched that space. Feels like it's going to be a massively growing area, not to mention the sort of big conferences that things like Run the World enable. But I can't imagine we'll see them do anything meaningful in that space for at least a year.
And to some extent, and this is kind of what I was getting at, if they shouldn't have to. And it has, I think, done a phenomenal job of hacking to get into Zoom by using the camera. And so it is certainly not a clean integration, and Zoom is not built kind of as a platform on top of which all of these companies can be built, which is really what I think they probably should be doing from their position versus going and trying to nip off each one of these use cases. But that makes me excited about companies like Agora, which is really built to be the back end Zoom on top of which all of these other experiences are built. So when you talk to them, I guess Twilio also has kind of a similar-ish product. But when you go talk to your therapist on Talkspace, for example, Talkspace isn't building out the video capabilities. That's Agora sitting in the background doing that. And so if I were Zoom, that's really what, or if I were a Zoom shareholder, I'm happy generally, but what I'd love to see is them building out a way for other companies to build on top of Zoom, which they don't have currently in any kind of easy way.
Yeah, I mean, you can leverage the Zoom API, which I know folks do, but it's still unclear whether they want to be more of the platform or more of that sort of pure Rails play, to your point. One of the things that you were talking about beforehand that I thought was really interesting was the notion that Zoom should use this opportunity to essentially sell stock and buy network effects. So would love you to share that sort of model live.
Yeah, so I think I'm going to write about this week, so you'll get some more detail there. It's a half-baked thought now, but the idea is, the greatest CEOs in all time in terms of their returns relative to the market, relative to their competitors, are the ones who've been really good capital allocators and bought their stock back when it was really cheap and sold their stock by either raising money or buying companies when their stock was really expensive. By any traditional measure, Zoom is really expensive. I think it's trading at above a 2,000 times price to earnings ratio. It's been a massive, massive run up. I haven't run the numbers, but even at a price to earnings to growth, even their PEG ratio at this point must be outlandish. So their stock is expensive. I don't think anybody's kind of arguing with that. They should, and on the other side, they don't have network effects right now. It's really easy to set up a Zoom, and that's why they're able to grow so fast. It's also really easy to go switch. I feel like personally, I've been using Google Meet a lot more often. And so what they should be doing right now, I think, is buying some sort of moat, whether that's network effects. Brand is probably their strongest moat right now, but kind of all of the other potential moats that they might build, they don't really have. And so I'd go out and buy companies that do have network effects, that have a little bit more of a social angle to them, and that get more kind of entrenched in the way that businesses work. Maybe even something like a Loom, where it feels like it might not have that same kind of social dynamic, but it's a lot harder to rip when you have kind of all of your company's message history, video message history, and something like a Loom to pull out and use somebody else versus a Zoom. Maybe there are some recordings, you can download them off the cloud or right to your computer. You have them, switch to Google Meet. So anything that can help build network effects or some sort of higher switching costs, I think they need to go out and acquire with their expensive stock.
Yeah, I think it's a really interesting idea. I wrote a piece I don't know, maybe a month, 2 months ago, about sort of the startups that are unbundling Google, and particularly sort of the G Suite. So, you know, you have plenty of folks that are tackling sort of the Google Doc, whether that's Notion or, you know, Coda to an extent, although they're also sort of unbundling Sheets, I would argue. Video, Zoom, obviously, Google Messages, Slack, stuff like that. And, you know, I posited a very unrealistic, but I would think intriguing combination of tools to create sort of a Voltron of productivity that could challenge the G Suite. And, you know, I think you could imagine Zoom trying to make a few of those plays over the next few months if they have the sort of internal bandwidth to do that, which is, you know, do they look at a Slack? Do they look at Asana, for example? Like what would that look like to snap up a project management tool as part of that? And what does that
Asana
enable them to do?
Yeah, you're working on the Asana S1 with the S1 Club, but where do people expect Asana to go public market cap wise?
Oh man, there have been a few propositions. I think it's somewhere around the 4 billion mark. Don't quote me on that, but that's sort of in my head at the moment. I think what would be really interesting about something like that would be what a potentially like philosophical difference that it would reveal between the two companies. Like Asana, in some respect, is making the bet that the future of work is async, and you know that's how people are going to be most productive. Whereas Zoom is obviously real time. I think probably there's space for both, and maybe there's some magic in bringing those two things together. But you know, whether it was a Slack or something that is more real time, like that could work too. I'm very intrigued to see what sort of M&A we might see from them in the future.
And it's fascinating. We should dig in, and I will for the piece, but more on their team. But it seems like it's always been a really product-focused team. Mm-hmm. And so I wonder how easy it is to kind of switch from that kind of product muscle to the capital allocation muscle that they'd need to really thoughtfully build something out. Because you could go on a spending spree and say, you know, 4 billion for Asana here. We'll do another couple billion for Notion, throw that on. Maybe we do a Slack. That'd be interesting who you put in the CEO spot if you acquire Slack. But, you know, it'll be interesting to see what they do with this, or even if Eric is too busy handling the growth to even worry about M&A at this point. And if the stock price falls back to earth before they're able to use it to acquire some companies.
Yeah, it feels like you kind of have to take advantage of what I've heard referred to by a few venture investors as the COVID blessing. For some, you know, some companies get the COVID blessing and many do not. But, you know, in 2 years' time or 3 years or 1 year, whatever we really think a realistic timeline is, some portion will certainly return to work in greater and greater degrees. And, you know, can Zoom maintain a price, the price it's at now in that world? I think we're all probably aligned that video conferencing isn't going anywhere writ large, but it's certainly, I don't at least expect it to have the same level of importance in 2 years' time as it does right now.
And we've been wrong predicting the future before, and we will again. But even if video is big, is Zoom the instantiation that kind of captures that? Or is it something more behind the scenes that allows other people to own the front ends? Like, there's just a lot of open questions, and you'd need all of those answers to come up in favor of Zoom to be able to justify where the price is right now, I guess, which leaves kind of another question on the fantasy M&A piece here, which is, if you're a target company, how do you even think about being acquired in Zoom stock right now if you're the board of a target company?
Yeah, that's a really good point that I hadn't considered. But yeah, I think you're you would have to look at it very carefully. In terms of looking at the future more broadly, one of the things. Actually,
sorry, let me interrupt. I think what you do right now is you pull a Hertz and you dump stock onto this market that loves your stock, and you use that to get cash, and then you go out and acquire companies. I feel like, you know,
that makes sense.
Tesla just announced that they're going to be selling $5 billion worth of stock, and the stock is down like 2% or something today. It didn't put a dent in the rally. And so I think now is probably as good a time as any for them to raise secondary and then use that cash to go out and acquire companies.
Yeah, that makes sense. In terms of the future of video, there was a protocol article, I think about 3 months ago at this point, where Yuan was talking about sort of the future of Zoom and really describing more of like a metaverse. You know, we associate metaverse, I think, more closely with Epic and Fortnite and really the gaming world. Do you think there's a shot that Zoom can own sort of the white collar, very boring ass metaverse?
So I think the question is it easier for Zoom to build out a lot of the capabilities that you would need for a metaverse? So whether they can have, you know, some sort of commerce infrastructure, whether they can build kind of these realistic type environments that you kind of need to do the office metaverse, all of those types of things, or if it would be easier for Epic or Unity to plug in video. And it really feels like it would be a lot easier for Epic or Unity to plug in video than it would be for Zoom to go build all of the things that essentially, and I forget who tweeted this, but that Unity and Epic have had like just teenagers kind of doing, like serving as kind of data for them for decades now. And so training their data sets on to help them build these kind of really rich, realistic worlds more and more. And it seems like it'd be hard for Zoom to kind of just bolt that on, even if their stock goes, you know, another 10x from here and gets to Apple levels. I don't know if you can build that muscle quite as quickly.
Yeah, it's interesting. I mean, I think culturally, it obviously would be so much harder for Epic, just for any business audience to take that seriously. Of like, yeah, just quickly hop in and, you know, say hey to Travis Scott and then go to your meeting. But technically, it feels like a much harder lift for Zoom. That would be a very left field acquisition. I mean, Epic is valued somewhere at like 18 billion. So again, you know, sort of a rounding error for Zoom at this point. But I think that would disappoint.
Tencent is not selling that to Zoom. I'll tell you that right now. I think they probably see the $17-18 billion valuation as a steal for them right now, given the plans that they likely have for in the future. But I think at some point, like, you know, Epic isn't Fortnite, and Epic might even sell it at some point, as they've done with games that they've built in the past. Epic is the Unreal Engine. And I think you can build all sorts of worlds and immersive kind of video environments on top of the Unreal Engine. Again, much easier than Zoom could go build all the things that Unreal has currently.
Yeah, that's super interesting. We've been talking about that as part of the Unity S1 crew of like, what is the massive bull case here? And it really feels like being the rails for the metaverse with Unity's engine is the play. You know, they talk about, you know, during their S1 sort of what their plans are beyond gaming, and there's all sorts of interesting case studies. Unity was used to create sort of the framework and the map, the model for Hong Kong's newest airport, for example.
Yeah.
So it's already being used in that sort of real world way. I wonder if that signals the opportunity for these gaming engines to, you know, build a business focused metaverse more easily.
100%. I mean, I think that's the beauty of kind of an engine, I guess, is kind of a platform. And that's the beauty of that angle, is that you can credibly build kind of whatever the end user can credibly build there. So it's not like a gamer is going out and building the Hong Kong airport. Architects and engineers are using that to render the Hong Kong airport and to steal all of the kind of physics and, again, the things that have been built up over years and years and years of gaming. And so I think the same thing could be true for an office environment or a warehouse environment, all these different environments that you can build. If you're just kind of the underlying platform and engine, you have so many more options available to you than if you're the brand around sitting at your desk and talking to people for hours and hours and hours and hours. People talk about Zoom's brand as a moat. I think a lot of people kind of hate Zoom also at this point. So that'll be interesting to watch as well. Like, if we're going to run away from Zoom as fast as we possibly can once we're able to run away from Zoom.
Yeah, I totally agree. It's in such a weird spot in that I accept it is the best version of what it is, but I take zero joy in using it. Like all of the UX is
Totally.
bizarre. Like the fact that, we started this call with you waiting in the waiting room for my meeting. There's no sound alert that happens when someone enters your waiting room, for example, which is makes no sense. Like why isn't there someone letting you know that as you're accidentally checking your email while waiting for someone, but like, hey, someone popped in, or any other more intuitive piece of this. So yeah, it's a marriage of convenience for many, I think.
And we haven't even discussed what could be the biggest threat, which is just the increasing size of Google's buttons. And so to the extent that, and for those who aren't familiar and don't use Google, maybe Google Meet, the button for Google's kind of Zoom competitor, in your calendar just keeps getting bigger and bigger and bigger and bigger, so that you don't
It's
even think
shameless.
about using Zoom. They're shameless, but that's the beauty of having distribution, which I guess Zoom is building now too. So where do they go with it, and how do they go from video to other things, I guess is the question that you're bringing up.
Yeah, it feels like I don't know if you remember this, but when Facebook rolled out stories on Instagram and like all of the memes emerged about like everyone else starting to plug in stories in their different things, it was like Microsoft Excel, check out Microsoft Stories, and like feels like that for Google Meet right now. It's like, man, anywhere I go, Google's just waiting there to try and have me hop into a video call.
And it worked on me, so
There you
I'm
go.
sure it'll work on others as well.
Any other, miscellaneous things you want to riff on here? Do you have any
One thing that we didn't
fast
talk
thoughts on
about.
YC?
Ooh,
Ooh.
yeah. So fast thoughts on YC, and I didn't prep for this at all, but just going through the companies, it feels super derivative at this point. I don't know. I mean, you've been an early stage investor, and I haven't. But what's your impression on the crop of YC startups?
Yeah, I think it's, we are probably a little bit at that phase where we see a lot of X for Ys, particularly like X for Y geography. This batch, I feel like had a fair amount of um, Asian versions of that, and particularly like South Asian versions of that. And then there was some chatter about this on Twitter, and I think it was true. For a while it felt like the companies you saw in YC were Uber for X, or maybe Airbnb for X, very sharing economy focused. Now it feels a little bit more infrastructurally based, and like the plaid for X is really sort of becoming the byline. And I think that's very interesting, and in some respect is a reflection of the party line that people repeat, which is like so many of YC companies at this point are focused on serving almost other YC companies or other startups. And it's just become very, very B2B focused in a way.
Yeah, one of the things that I picked up when I was researching Stripe last week was they talked about the Collison installation, where the Collison brothers, instead of where most YC companies would say like, hey, do you want to try my beta, and then send them a link, the Collisons would be like, all right, great, take their computer and put Stripe right into their product. You can't, one, do that remotely,
Yeah.
but then two, I feel like at some point, if the batch is massive and you're just selling to each other, it feels like it loses a little bit of its magic there. So I don't know, a conversation for another call or another host is the approach. Would you rather have YC's approach, which feels like somewhere between curation and building an index, or would you rather have AngelList's approach to kind of early stage portfolio construction, which feels like just purely an index? So I think that's going to be something that's interesting to watch. It doesn't have to be either or. They could both do very, very well, and both are doing very, very well. But it's interesting kind of where the line between curation and just taking a bunch of good derivative companies is drawn.
Yeah, AngelList feels like it's having such a moment this summer. But anyway, you were, before I rudely cut you off and directed your thoughts towards YC, I feel like you were going to share a topic.
I don't know. We were just talking about, I thought we were still on Zoom here for a second, and was just talking about the fact that people who bought the furthest out of the money Zoom calls, which are, calls will go up from kind of where the price is today to some level below it to some level way above it.
Yeah.
One, it is now trading higher than where the highest out of the money weekly calls were trading. So it was trading above 450. There were no $450 calls. The $445 calls were the highest call available. And they were up at some point over 8,000% today. So just putting that, if you put $1,000 in those calls yesterday, it'd be worth $80,000 today. I think it's now back to a much more moderate 4,000% increase, but just absolutely insane that even while people were predicting all of this growth, it still outshot the furthest out of the money weekly calls.
Wow, that is bonkers. It makes you want to just straight up gamble, but I will say, unless you are a professional, you definitely shouldn't.
And it's only 1/4 of the way to Tesla, so maybe there's room to run still. Who knows
Yeah.
anymore?
Yeah, gosh, who does know? Cool. Well, I don't have anything else to riff about. Unless you do, should we call it another good day at the Not Boring Generalist HQ?
Let's do it.
All right,
Mario,
sounds
this was
good, man.
fun.
It was fun. Take care, man.
See you later.